The live intraday price for Datavault AI Inc., trading under the ticker DVLT on the NASDAQ, is currently 80 cents USD, reflecting a downward movement of 2.8 cents or approximately 3.39% during today's session on Friday, December 26, 2025. While a casual observer might see a penny stock struggling to find its footing after the Christmas holiday, the reality beneath the surface is a volatile tug-of-war between aggressive revenue guidance and a balance sheet that remains deeply underwater. Most traders looking at investing sites see the recent 13% drop from earlier this week as a simple technical rejection of the dollar mark. But the deeper insight is that institutional activity remains almost non-existent at less than 1% ownership, leaving the price action entirely in the hands of speculative retail momentum and high-frequency algorithms. When you look at the landscape of online investing, the expectation is usually that a company with 400% year-over-year revenue growth should be soaring. That is the narrative management has been pushing through major outlets, highlighting a pipeline that supposedly scales to $200 million by 2026. However, the reality of the market right now is a sharp skepticism towards small-cap AI plays that burn through cash faster than they can book it. This creates a fascinating tension for anyone considering an individual brokerage play here. You have a company that recently rebranded from WiSA Technologies to Datavault AI to better align with the data monetization trend, yet it is currently trading near its 52-week lows despite those massive growth headlines. If you are using a platform like Interactive Brokers to track the microcap space, you likely noticed that the volume spikes in DVLT often precede sharp sell-offs rather than sustained rallies. This suggests that every time there is a positive news catalyst, like the recent appointment of a high-profile advisor for their NIL exchange or the CEO's appearance on national news discussing crypto banking, the market uses the liquidity to exit rather than to build long-term positions. This is the hallmark of a show-me stock, where the expectation of future glory is constantly being undercut by the reality of immediate dilution and insider selling. Over the last 3 months, we have seen nearly $1 million worth of shares sold by insiders, including significant liquidations by major shareholders like Scilex. Before we get into the nuts and bolts of the actual business model, I want to hear from you. The volatility in this sector is wild right now. Comment below how many shares of Datavault AI you currently hold, or if you are waiting for a specific price target before jumping in. The institutional lack of interest is perhaps the most telling metric for those using Schwab Intelligent Portfolios or similar automated investment help. While heavyweights like Vanguard and JP Morgan have initiated tiny positions, they're essentially rounding errors in their broader portfolios. For a retail trader on the Robinhood app, the low share price makes it easy to accumulate fractional shares, but the lack of institutional floor means there is no one to step in and stop the bleeding when the sentiment shifts. We saw this clearly in mid-December when a shareholder investigation announcement sent the stock tumbling over 7%, proving that the market is currently hypersensitive to any governance or legal friction. Let's talk about what Datavault AI actually does, because the business is quite complex. They operate in 2 primary divisions, acoustic science and data science. The acoustic side is the legacy of WiSA, focusing on wireless high-definition sound transmission. The data science side is the new focus, centered on the Information Data Exchange, or IDE. This platform is designed to allow organizations to value, secure, and monetize their data assets using Web 3.0 anchoring. They're essentially trying to build a clearinghouse for data where trust is the primary product. They have recently signed contracts with entities in the mining and geothermal sectors, aiming to tokenize real-world assets. The theory is that by turning physical assets into digital tokens, they can create recurring royalty streams. The financial reality, however, is stark. In the last reported quarter, Datavault AI posted revenue of roughly $2.9 million. While that's a huge jump from previous years, the net loss for the same period was staggering, with margins that are deeply in the red. This is why you see such a disparity between the $3 price target some analysts are putting out and the sub-dollar price the market is actually paying. Investors are being asked to buy into a future that requires a massive leap in execution. Management is guiding for $30 million to $50 million in revenue for the current year, but the market is looking at a current ratio of 0.68 and wondering how they get to 2026 without significant further dilution. For those managing their own accounts through Fidelity Investments or similar self-investing tools, the risk profile here is maximum. You aren't just betting on a technology, you're betting on a pivot. The transition from a hardware-centric audio company to a software-as-a-service and data exchange powerhouse is a difficult maneuver to pull off under the best conditions, let alone in a high-interest rate environment where the market has lost patience with unprofitable tech. The recent strategic investment agreement with Scilex Holdings provides some breathing room, but it also ties the company's fate to the success of another volatile entity. Looking at the technicals on the Fidelity trading platform, the 50-day moving average is currently sitting far above the current price, acting as a ceiling that the stock hasn't been able to crack. Every rally toward that $1.50 or $1.90 level has been met with aggressive selling. Trading volume has been erratic, sometimes hitting 3 times the daily average, which usually indicates a battle between short sellers covering and retail buyers trying to catch a falling knife. When a stock is down 64% in a single month, as DVLT was recently, the expectation of a bounce becomes a trap if the reality of the fundamentals hasn't changed. The macroeconomic environment is also playing a role here. As we head into 2026, the focus on AI is shifting from broad potential to specific profitability. Companies that can't show a clear path to being cash flow positive are being punished regardless of how many patents they hold. Datavault claims to have over 70 patent assets, but as any seasoned investor will tell you, a patent is only as valuable as the revenue it generates or the legal settlements it wins. The company has retained top-tier IP litigation counsel to pursue settlements against major banks, which adds a speculative lottery ticket element to the stock, but that is a long and expensive process that rarely provides a quick fix for a struggling price tag. If you are using online investing sites to compare DVLT to peers like Palantir or CrowdStrike, you'll see a massive gap in valuation multiples and institutional support. While Datavault tries to position itself in the same AI data category, its market cap and liquidity profile put it in an entirely different risk bucket. This is an individual brokerage play for those who have a very high tolerance for volatility and a belief in the specific tokenization of everything narrative that management is selling. The future outlook for Datavault AI hinges on 2 things: the closing of the Scilex investment and the actual realization of that $30 million revenue floor. If they miss those numbers, the expectation of a 2026 explosion will vanish and the stock could easily find new lows. However, if they can prove that their data exchange is being adopted by the aerospace, defense, and energy sectors as claimed, the current valuation will look like a massive disconnect. The reality is likely somewhere in the middle. A company that has real technology but is struggling with the transition to a viable commercial model. For anyone watching this on the Fidelity mobile app or checking their Robinhood investments today, the takeaway is clear. The market is currently ignoring the potential of the $200 million guidance and focusing on the reality of the 80-cent price tag. This tension is where the opportunity and the danger lie. If you believe the revenue growth is sustainable and not just the result of one-off licensing deals, then the current price is a significant discount. If you think the cash burn will necessitate another round of financing before the end of the year, then the downward pressure is far from over. In summary, the central insight here is that Datavault AI is a company in the midst of a massive identity shift. The contrast between their ambitious 2026 forecasts and their current penny stock status represents the ultimate test of investor conviction. The expectations are built on a future of decentralized data exchanges and multi-million-dollar royalty streams, but the reality is a current market cap that reflects deep skepticism about liquidity and governance. Whether you are using SoFi Active Investing or a Fidelity brokerage account, keep a close eye on the upcoming quarterly filings. The revenue growth needs to translate into narrower losses if this stock is ever going to regain the trust of the broader market. The movement we see today is just another day in the life of a high-beta microcap. It's a reminder that in the world of online investing, the loudest stories aren't always the most profitable. Make sure your portfolio is diversified enough to handle these kinds of swings, maybe using something like Schwab Intelligent Portfolios to balance out your more speculative individual brokerage bets. The ride for DVLT is going to be bumpy, and only the investors who truly understand the rails